Hello and welcome again to my channel. I'm David, a financial analyst for over 28 years. Today, I will analyze Euro-US dollar through interest rate analysis. I have received several emails from traders asking my opinion on Euro-US dollar. Here is my analysis of the currency pair through interest rates. I start with the most important and most closely followed data of recent months, inflation. I do so by showing you a chart summarizing the inflation trend over the past year and a half in the Eurozone and the United States. In green is the inflation in the Eurozone, and in blue is that in the United States. Two different trends due to two different monetary policies of the two central banks. Poles, much more aggressive, hawkish, and laggards, more wait and see. This led to an initial widening of the differential between the two rates, with a consequent collapse of the Euro-US dollar below parity. The next chart shows exactly this. In red is the yield differential of 10-year Eurozone and US bonds, and in black Euro-US dollar. You can easily see that the two lines, with the exception of the May-October 2022 period, mostly due to uncertainty about the ECB's monetary policy, are well correlated. Since a few months ago, since November 2022 to be precise, something has changed, and can be summarized by the different inflation trends, as you have seen in the previous chart. While in fact in the US inflation is returning to more acceptable levels as a result of the more aggressive monetary policy adopted by Powell, with numerous rate hikes, in the Eurozone the situation is not yet at those levels, and this could lead Christine Lagarde to remain hawkish for longer. A rate hike of another 50 basis points is expected in May, and it's not certain to be the last. While previously a 4% rate was considered the ECB's monetary policy target, there are now analysts who see rises above that level. In the United States, another rate hike of 25 basis points is expected, and most likely already at the FOMC meeting on Wednesday, as shown by the CME FedWatch tool, that gives an 88% probability of a 25 basis point rise at the next FOMC meeting, and only a 12% probability that rates will remain unchanged. The rate hike is expected to be the last, but there is more. Two rate cuts of 25 basis points are expected by December, most likely in the second half of the year, with the US rate expected to end the year in the 450-475 basis point range. By using the 30-day Fed funds futures, you can see how the ZQK23-ZQZ23 spread, built by buying the May futures contract and selling the December futures contract, shows a 0.50% drop by December. On the other hand, in the Eurozone, rates are expected to rise by at least another 50 basis points, with no hint of future cuts on the horizon. This will bring the two interest rates very close together, resulting in a strengthening of the euro against the US dollar, and thus a rise of the Euro-US dollar. This is obviously the current situation. If conditions change in a day, a week, or a month, the conclusions could be very different. To all this, however, a complete macroeconomic analysis has to be added to get a correct picture of the two economies. I conclude with US Treasury Secretary Janet Yellen, who stated in an interview with CNN last week that banks may act more cautiously and may reduce lending further in the wake of recent bank failures, possibly negating the need for further interest rate hikes by the Federal Reserve. Yellen also added, "I do think there is a path to bring down inflation while maintaining what I think all of us would regard as a strong labor market. And the evidence that I'm seeing suggests we are on that path." Thank you for watching this video. I hope what you have learned today will help you in your trading. Let me know what you think about it in the comments down below, and if you are interested in other educational videos on the world of trading and financial markets, remember to subscribe to my YouTube channel. This way, you will be updated with all my newest videos.